excited to bring you an amazing video. If you're watching me for the very first time, my name is Emmanuel Joseph, popularly known as King EJworld, and in this channel we show amazing content where we tell people about how to make money, how to create wealth through the financial market, and generally passive income and the internet. Now, in today's video, I'm going to be teaching you a strategy called flip zone. Now, maybe you are out there and you're a forex trader and you're looking for an interesting strategy that can make you money. Stay tuned to the end of this video and it's going to help you a great deal. Now, I learned this strategy from King Soul. So shout outs to King Soul, shout out to King Souls. And I want to teach you about how you can make money using this strategy, smart money concept. So stay tuned. Hey guys, welcome back to the channel. Now, in today's video, we're talking about flip zones. Now, because I'm having my yogurt. All right, so let's talk about flip zones and how you can take advantage of flip zones and how you can make money off flip zones and how it works. So the first thing first, we need to understand 5 major things. So I'm going to teach about 5 major things or 4 major things. And the first thing is I'm going to talk about demand zones, supply zones. I'll just call it names that you know: support, resistance, break of structure, order block, flip zone. So first thing first, we're going to learn what support is. We're going to learn what resistance is. We'll learn what a BOC is, a break of structure is, and then we'll learn about an order block, and then we'll talk about flip zone. Okay? Now, I want to make it as easy as possible so that you are able to understand how this works and how you can take advantage of flip zones. And of course, we'll do a few analysis and we'll see how it works and all of those kind of things. Now, the first thing I want us to talk about is what is what I call a support zone. What is support zone? What is support zone? Now, support is simply, it's just a simple, how do I explain it? I like to explain support using something like roof and top, okay? Or something like, okay, let's give an example. If you have a house, let's say a building of a house, there is what is called the roof. Obviously, you know that. There's what is called the roof, and there is what is called the floor, right? Support basically is the floor. Resistance basically is the roof. So when you say a support zone is basically a point where price comes, rejects, or holds. All right, it comes, it holds up, and then it returns back to that place and holds up. That's what we call a support zone. A region that is what I would call like a holding position or a holding area. So let's look at the charts, for example. Let me go for a very clean chart. Okay, very clean chart. Okay, so this is a clean chart. Okay, let's go for a higher time frame so we see what we're talking about. This is a higher time frame. So this is a position, okay? And if you extend this position, right? What do we have here? Price is going up, going up, going up, comes down, goes up to this point, comes down, come, comes in, comes in, resists. This is what we call a resistance zone. Price is resisting. So price is unable to break this place. It's mitigating and failing, mitigating and failing. Okay, so price is unable to break this structure. So once price is unable to break this structure, this is what we call a resistance zone. So I can say resistance, all right, or like as I like to put it, RZ. Okay, so that's a resistance zone. So if we extend it further, because I like to look backwards in the charts. So I tell people the higher time frames are the best time frames to understand what the market is doing. So for example, if I extend this into the past, all of this region is like a resistance zone. So price comes in, goes up, comes in, you see it breaks a bit, but it still goes back up, comes in, breaks a bit, comes up. So for example, this is what we call support turned into resistance. So this was a support zone. Now, what's the difference between a support zone and a resistance zone, an SZ zone? Okay, so this was an SZ zone, a support zone, right? Support basically means a place that once price comes, it supports, it holds it and returns it back up. It comes to that level, it holds it, returns it back up. It comes to that level, it holds it and returns it back up. That's what we call a support zone. Okay, that's what we call a support zone. A support zone basically means a place that price holds. Okay, so if, for example, if we look at this place, for example, there is a region of concentration. So you can see this is the region of concentration within. So price is moving between 1.28. Maybe that's a bit high. I can say this. Yes, a bit too high. I can say between. I like to use psychological levels. So a psychological level is just a number of concentration that I'm thinking about, which is usually a whole number between 1,000 pips to 500 pips, okay, or 50 pips to 100 pips, depending on how you collect it. So this is 1,000, 1.20, 1.25. Let's do 1.25. So this whole region initially was a support zone. So price will come into around 1.20, just a bit, a few pips higher, reject it, come in, reject it, come in, reject it up. So this is what we call this is what we call a support zone. So price will now come in, reject it, come in, reject it. Now, what's a resistance zone? A resistance zone is a zone that price comes in and is unable to mitigate. Is unable to, all these guys, they have different terms. It's unable to break the structure, or it's unable to break above that number. For example, this number is the holding number. This is like the foundation. So support is like foundation. Resistance is like roof. So basically, price comes into the resistance zone. It cannot go above the resistance zone. Price comes into the support zone. It cannot go below the support zone. Okay, so for example, now this is a resistance zone. So price comes into this place, rejects it. So that's still 1.25, reject it, comes in, rejects it. So this is what we call a support zone. So I said we're learning 3 things, we're learning 4 things. So SZ, ROZ. The next thing I want us to learn is BOC. All right, SZ meaning support zone. ROZ meaning, now of course these acronyms will be in the description in this video. All right, ROZ meaning resistance zone. BOC meaning break of structure. That's the meaning of BOC, break of structure. Okay, so we have a support zone, we have a resistance zone, we have a break of structure. Okay, so price comes in, supports, supports, supports. Price comes in, resist, resist. Now you can notice support turned into resistance. That's what we call a change of character when support turns into resistance. So in this place, we had a bullish situation. Price was going up for some time, and all of a sudden, price changed character. Okay? Now, we can also look at this place as well and say we have almost the same situation. We can look at that as almost the same situation. So we have a support zone in this place. So price came in supported. So let's see the numbers of interest. So I can say 0.05 to just clone it. So I clone to 0.0500. Okay, okay. Okay, let's say 1,000. Okay. So price, this was a whole resistance zone. So price, or a whole support zone. So price comes in, supported around here, and it went up. So we can say, let's take it higher. Let's say 6,000. Let's say 3,000. Okay, so we can use that whole region. Now, price comes in, breaks down. So support is broken. This whole support is broken. Okay, and now comes back around this region. And acts like a resistance region. So we have an RZ region. Now, what is a BOC? I said the next thing we want to talk about is BOC. What's a break of structure? This is a break of structure. Anytime you see price transforms from it breaks a support zone. So for example, price came in, shut up, shut up, shut up, shut up. It now breaks it. This is what we call a BOC, a break of structure. So price has broken this structure. Price has broken this structure. So we have a break of structure. That's what we call a BOC. Okay? Now, what is the idea of flip zone? Flip zone simply means looking at the character of what the market is doing and trying to understand a change of direction. So for example, price moves, in this situation, price moves from support to resistance, comes back to support, goes back up to resistance, and breaks support. And price begins to rally back up. So price will rally back up into support. That's what price will do. It will rally back up into support or into resistance and then continue downwards. So the idea of flip zone is simply, let me give you the structure of flip zone. This is the structure of flip zone. So we have what is called an order block. So what is an order block? An order block is the last candle, for example, for a bullish situation. An order block is the last bullish candle, the last bearish candle, sorry, for a bullish situation, it's the last bearish candle before the whole movement to the upside. That's what an order block is. The last bearish candle before the whole movement to the price upwards. Do you understand? So for example, in this kind of situation, guys, so I want you to understand this very well. In this kind of situation, we're looking at this kind of situation. Let me see, where should I use? Okay, so let's do this. So this is a bearish situation. Okay, so the last bullish candle, this candle, if I draw it down and extend it, that is the order block. That is the order block. Because it is the last green candle. Can you see it? The last green candle before the downward movement. And what happens once price returns back to that place? It rejects. So let me explain for a bullish situation. The last red candle, this one, which is this one. The last red candle before or after the whole rally up. So price begins to rally up from here. So this is the candle, price rallies, breaks it, comes another bearish candle, goes up. So, but this is the last. So this is the order block. Okay. That is the order block. Now, let's continue. So a BOC, in the other hand, is a break of structure. So a break of structure. Break of structure. That's what is a BOC. A break of structure. So for example, this is break of structure to the downside. So this is a break of structure. So this is a resistance zone. This is a support zone. So price supported at this place. This was the order block. If we look carefully, let's try to find the order block. So the order block, this was the last candle, the last green candle before the rally up. So let's look for it. So this is it, this one. So if I draw it, everything, you can see that when price rallied up, it returned back to the order block. It just tapped it, bam, and went back. Okay, so we have OB, the order block, OB. So price now returns back up from the support zone to the resistance zone. Okay, so this is the break of structure, which is BOC. Which is BOC. I'm putting it in the center. BOC, so a break of structure. Now, for a bearish situation, the structure of flip zone is this. This is the structure of a flip zone. So, we have price coming from a long-term position, comes in, rejects back up or supports back up, comes in, supports back up. Now, it supports back up to another level.
Sorry, we can't see your screen. Your screen. Yes, it's back. It's back.
Okay. Supports that level and breaks that level. When it breaks that level, right, you have a support zone that price now rejects. Okay, so let me draw it properly. So price comes in, supports, comes in, supports. Okay, mitigates, BOC. So we have, the first thing is we have a break of structure at this level. We have an order block here. Now, when price returns back to that level, this is what we call a flip zone. Easy peasy, guys. Very, very easy peasy. So we expect price to go back down. Or you can do like this. This is even better. Sometimes you may not get there. This is what we call a flip zone. Flip zone. This is what we call a flip zone. So we have a BOC here. A flip zone. So what I would have just done in this kind of situation is that I'll just put my sell and I target just 80 pips. So I'll do 80 pips upwards. Let's say for this, since it's a very higher time frame, 800 pips. And I would count, let's say 1:3. 1:3 or 1:4. 1:4 is 2,400. Equal to 2,400. But usually you can extend it down to this place. So in that kind of situation, this is 800 pips to almost 19,225. That's a whole lot of pips. A whole lot of pips. So that is the idea of course, yeah. This is where your first exit will be. So that is for a bearish situation. Now, for a bullish situation, is almost the same thing. And I just want to show you how a bullish situation will work. Just 1 second, guys. I want to show you how a bullish situation will work.
Banta is ready.
Please kindly mute your mics because we're recording and we're dropping this video live on YouTube, guys. Now, for a bullish situation, in the other hand, we have a resistance zone. Price comes in, rejects that resistance zone, mitigates the support, sorry, not the resistance, it supports, Yeah, a resistance zone, yes, because I have it written as support. A resistance zone mitigates that resistance zone with like a BOC. With what is called a BOC. With a BOC, right, which is a break of structure, returns back. Oh, sorry. Remember, it's coming from a long-term position. And then returns back to that region and shoots back. So this is called remember, it breaks the structure. Breaks the structure with a BOC. A break of structure. Returns with a break of structure. This is called a flip zone. So in this kind of situation, I come here, voila. Simple, guys. So guys, I hope that has been helpful. In the next video, I'm going to talk to you about how to trade with flip zones. Now, today's video, I just wanted to show you how the structure of flip zone. So this is for a bullish situation. For a bearish situation, you have price comes into a support, shoots up, returns back, shoots up a bit, breaks that support, returns back to that, and shoots down. So this is what we call flip zone. Yeah, flip zone. A simple break of retest, but with the idea of understanding other blocks. So you have an S zone, you have a BOC, you have a BOC, and then you have a flip zone. You have a flip zone. So in this kind of situation, you put a buy. Oh, sorry. You put a short to this level, above it. So this is for this is a bullish situation where price is going up. Price is pointing up in this kind of situation. So you have price going up in this kind of situation. And then this is when price is coming down. Easy peasy, guys. Flip zone explained. So remember to subscribe to this YouTube channel to get amazing content. In the next video, I'm going to show you how I trade with flip zone. I just felt let's so that the video is not too long. You understand? So first thing, I'm teaching you flip zone from a bullish perspective and a bearish perspective. The next video, I'll show you how to trade with flip zones and examples of flip zones in the market. But back test this and see how it goes. All right. So thank you so much for watching today's video. See you in the next one. This is King EJ World.